Take us through your numbers. You had a beat on earnings per share, but what happened with revenue?
Yeah, so we made a strategic decision in the first quarter to really focus on profit per new vehicle. And one of those things is the opportunity for us to make sure we're taking care of each and every customer when they come in our stores. And we like what we saw in our raise in profit per new vehicle being up a little over 7+%. And we saw that across all the brands that we serve in serving our customers. So while we made a strategic decision to not discount as much, we feel great about the start we've gotten to the year.
So Carl, let me ask about trucks, because how much of that is trucks as a practical matter? I talked to Bob Shanks, the outgoing CFO of Ford, yesterday when their earnings came out, and they did pretty well in large part because of that F-150 truck in domestic U.S. This is what he had to say.
North America and credit are the two pillars of the company, and they have driven results for quite a long period of time and continue to do so in the quarter. We saw a strong mix. We saw strong positive net pricing. Our costs were only up a little bit, so we had very, very good leverage. And within that, F-Series was strong. We got positive contributions from the new Ranger and America's best-selling van. The Transit also contributed. So it was broad-based even within North America.
So Carl, for Ford, it was a lot about trucks as a practical matter. Is that what's helping you get the profitability up of new vehicles?
Yeah, I think it's regionally based, as you know, David. Like if I'm moving from Texas, where everybody wants to drive one of those new F-150s, and it was great to see Ford, which is they're in the middle of a transition from sedans to SUVs. But I'm a Ford person from way back, and so it's great to see them report yesterday. And we like the lineup we're seeing from Ford and where they're going. But make no mistake, trucks and larger SUVs and vehicles, they're a big part of our performance in Q1.
Carl, I got to go back, though, to the sales number, and specifically first quarter comp sales down 5% for the quarter. Analysts were forecasting about a decline of 2%, so that's much deeper than everybody was forecasting. How will that trend continue? I understand you're sacrificing for earnings, but ultimately investors in the street care about growing that top line, growing really your sales and your revenues.
Yeah, and I think that's a great question. We're not sacrificing for earnings. One of the things we're working diligently to do is we know this is we're at the end of a cycle in the economic cycle, so we're making sure our inventories are in line as we head into that cycle to make sure we have the right inventory in stock to serve our customers. And in many cases, that means we don't have to discount as much if we've got the right vehicle on our lots. And so we're focused on taking care of each and every customer as they're in our stores, making sure we're maximizing that opportunity. And then lastly, making sure we're offering some of the new things that we've talked about for the last several quarters, our brand extension strategy to serve them. So we like to think of serving the customer as they need it. And I think as we continue to grow both execution in our stores, it'll be a great opportunity for us to keep that right price volume mix, which we're focused on.
Carl, we all like to focus on selling bright, shiny new cars. What about parts and service? How much of that is really driving the profitability of AutoNation at this point and the growth potential?
Well, we look, our first brand extension, let me talk a little bit about our brand extension strategy. The first one was really going after customer financial services, and we saw a significant lift this quarter in our execution there inside of our stores. Parts and service, as you mentioned, David, is a big part of the strategy. It's one of the reasons why Mike and the board selected me to come be a part of the AutoNation team. My experience with global supply chain work at Home Depot. We see that as a significant opportunity for us going forward. We have 6 distribution centers now, 2 forward stocking locations. We're going to open another distribution center in May. And so we see parts and service as a valuable part of everything that we do in serving our customers, not only in our stores and customer care, but also in our collision centers.
I am also curious, Carl, you folks implemented a $50 million restructuring earlier this year to prepare for the downturn. Are you seeing that downturn?
I think we're seeing that downturn. As you look at retail sales being down, if you look at J.D. Power, we'll call it 6% or so. You can feel that in the economy, days supply going up for the industry. So we're prepared for it. One of the great things that Mike Jackson and the leadership team did before I got here was really to lean this company out and be prepared for that downturn. What's really exciting is as we took that $50 million SG&A and and the 3 cent per share restructuring this year is that it didn't impact our execution in the first quarter, and I think that's the largest message that we're bringing to our team is we can execute in serving our customers and do it in a much more efficient way.
So, Carl, just take one half step back here. At this point, as I understand, something like 15% of your profitability comes from actually new cars, and the rest is off on pre-owned cars. Is that going to shift? I know you're getting the profitability up of the new cars, but is that fundamental balance going to shift?
You bet. I think it's something, and as I look at it, it's an opportunity for us, David, we really believe in our one price strategy. We think in the used car market, it provides an incredible shopping experience for our customers. It's an opportunity for us to continue to serve them in the way they want to be served. And so as we consider opportunities that we can improve upon and get better at in 2019 and beyond, it's executing our used car strategy. And that includes our We'll Buy Your Vehicles, which we launched and we finally rolled out to all of our stores. So taking care of our customers, especially in what they want in that used car market, is a really, really fantastic opportunity to explore for us going forward.